Good morning, good evening, good whatever time it is you're listening to this. I hope you're having a good one. I'm going to be going over the data sets and the SPY for May 21st, 2025. And with that said, let's go ahead and jump straight into the data. We'll pull it up. There we go. All right. So we don't have very much data tomorrow. Essentially, we really only have Fed member Bowman speaking at 12:15 p.m. And then we have the 20-year bond auction at 1 p.m. Uh, really not a whole lot of data until Thursday. That's when we get the PMI or the PPI, which was it's PMI, I believe. Yeah, the PMI. So yeah, tomorrow we shouldn't expect a whole lot from, the data perspective. But again, the narrative with the tariffs is starting to kick back up, and there's been a lot of bearish news from, Jamie Dimon saying all the stuff he said earlier this week, and just a lot of the treasury things that are going on with the yields and whatnot. So um, we really need to be paying attention to if President Trump's going to be saying anything, if he's tweeting anything, because that can change the direction of the market right now quite a bit. But yeah, other than that, we really shouldn't be expecting a whole lot. Bowman can say a decent amount of stuff. He's pretty much one of the main ones to listen to besides like Powell and Kashkari. So I'm interested to see what he has to say tomorrow. But other than that, it's really going to be a pretty boring day. Just a quick reminder before we get into the technical analysis. If you've been finding value in my insights, consider joining my Patreon. For just $12.99 a month, you'll get access to my trades, courses, and powerful tools to help you grow as a trader. I'd love to have you be a part of our team and community. And it's less than 43 cents a day. So if you'd like to join, click in the link in the description. Thanks. And jumping straight into the technical analysis, as always, let's open up the daily time frame and let's go over our moving averages and our Bollingers. And just to note before we really start going over everything, um, you can see how we're starting to pull away from this upper Bollinger. Uh, that's something that I've been discussing, and even though the price action hasn't really shown some like drastic drop, this is kind of how each major sell starts. You pull away from the upper Bollinger. As you can see, you start pulling away from the upper Bollinger, pull away from the upper Bollinger, pull away from the upper Bollinger. Sorry, I'm just trying to hammer this point in just a little bit. Pull away from the upper Bollinger, pull away from the upper Bollinger. That's how you create these movements. Okay, so the market right now is again starting to pull away from the upper Bollinger, and it's thoroughly testing this 5 mile range. Now, what's the 5 mile right now? It's currently at 591.99, and since the market closed at 592.85, it's pretty much going to be right at that 592.30-ish range, give or take. It could pretty much be right at that 592 range, depending on how low we get in the overnight and the pre-market, or how high we get, depending on if we get some early morning good news or whatnot. But that gives the range of the 5 mile tomorrow. Very likely the upper bounds of it's going to be within the the 594.30 range, give or take a little bit on that one. And the lower bounds of the 5 mile, sorry, my daughter's deciding to grab a toy and drag it across the wall, so if you hear any scratching in the background, that's why. Um, the lower bounds of the 5 mile is going to be very, very close to that 589 range. So we're starting to look down past this 590 range again. Now, the 10 mile is very close within testing range, and even though it's not something I focus on testing, it is still technically the second closest support right now. And that the range on that is basically for the upper bounds, it's 584 to all the way to 580. Um, so potentially we could see that tomorrow. That's not too far away from where we're trading right now. Uh, but not too focused on the 200 mile. That's still quite a ways away, but the 20 mile is starting to pull up towards it. Or we might even only be another session or two away from the 20 mile breaching that 200 mile range. So um, that's actually a very bullish thing for the market, but that's only as long as we can maintain it. And I'll kind of discuss that in a little bit. Now, the upper Bollinger is still slightly pulling away. If I really drag this out, you can see how it's kind of turning into like a small little scoop and pulling upward. That's because the 20 mile is starting to pull upward. Even though we're chopping in this range, and as you guys can see, the last few sessions have really kind of held that same area. Uh, it's to pull support upward. Now, the last two sessions, and it's really the last three sessions now, we've pretty thoroughly tested this 5 mile, and I want you to kind of look at it on this screen where I really open it up. But as you can see, we pulled into the 5 mile during that Friday session. No, that's Thursday. That's Thursday session. So we pulled into it during that Thursday session. We hit the bottom bounds and the upper bounds. We are now pulling into the 5 mile again, hitting the upper bounds, opening up the lower bounds, starting to really close off the top bounds and really open up the bottom bounds. So what I'm looking for from this is for the 5 mile to start rejecting the market, where the market will basically look towards the 5 mile as a resistance to push us downward. And that's so that the market can retest the 20 mile. It's been quite a while since we retested the 20. It's been since the end of April. So it's nearing about that 1 month range where, generally the 20 mile is tested every 20 trading sessions. So as you can tell, roughly every 20 trading sessions, you can see the market kind of cutting through this area. Um, it's nearing that time again. So if we do not see massive buying starting to pick up, then that's kind of where we're going to start looking towards is that 20 mile range, which currently it's at the 568. But as I said, every session it is going to be pulling upward as long as we're trading above it. So it's very realistic. We can see the 569, the 570, all the way to the 572 within the next 3 to 4 trading sessions, give or take. So that's not very far from now, in terms of how far the market price can travel in that time. That's really not that far away. Um, let's go into the hourly structure really quick, and I'm going to hide the Bollingers and hide the moving averages. Now, we have some kind of wonky structure, and I'm going to pull up the 4 hour chart just to show this a little better, and you should probably follow in the hourly because that will look a little better on your screen. So what do we have building right here? And I'm going to open up the drawings and hopefully it doesn't make my screen look like a mess. I'm going to edit this really quick and then I will be right back. Alright, there we go. So I had added a bunch of things. This is the daily chart again, and I'm going to kind of hide this liquidity zone. Actually, no, I'm not, because the 20 mile is starting to pull right above it. So technically, this makes it a very, very, very good bounce point. Uh, if the market wants to build liquidity to test the 20 mile, they absolutely can. And since the 20 mile is right on top of this, huge chunk of liquidity, they can use that as a rejection point. I just wanted to point that out really quick before I forget. But since we're on the daily chart, I felt like it would be a really good time to highlight that. Now, why did I bring up the daily chart? Gonna hide the liquidity zone. We have this massive major selling channel. Okay, and this channel has significant weight. It's been holding weight technically since President Trump got elected. Okay, this is what really originally created this massive selling channel from the rally we had. Now, why does that matter? These channels like to hold a lot of weight. Um, I'm not going to explain entire channel theory right now, but if you have been following my work over the years, you know exactly what I'm talking about, how they like to bounce off of these channels almost exactly. Um, if they don't take the exact point, then they will generally take, very close to it. So why does that matter? We're very close to the top of this channel. We are starting to see very heavy tapering in the buying, and that's a very significant signal to me that's showing um, one, either we're tapering into a cell, which that would pull down into forming the head on this larger head and shoulders, and I'm gonna quickly draw that just to show everybody because my drawings have deleted, and that's why I have this circle right there. Okay, so we have this really huge gap of liquidity right here, and we were building that before that massive, massive gap up. And it's this basically this 550 to 560 range. Okay, and that's a really huge left shoulder. This all the way to the 570 or the 562 to the, essentially to the 595 where we've been trading. This is forming a really huge head on this head and shoulders. Now, technically, all we have to do is reject this 5 mil and do a 20 mil test, and now we have completely formed the head, and now we can start forming the right shoulder. Okay, and I know this is a bearish thesis, but I'll get into the bullish one in a second, but this would form a very large inverse cup. Now, why does that matter? It's because we've had this very large inverse cup created from here, and it actually extends all the way down here. Um, that, of course, is going to get deleted. Hold on, let me draw this properly because I want everybody to see this. So there is, yeah, it's from down there. It's actually down in that range. I won't be able to drag it. Um, yeah, we'll just go with that. So as you can see, massive inverse cup. Okay, and what we're trying to determine is if this is going to continue and see follow through. And what that follow through would be this handle building out. Okay. Uh, so far, we're not sure if this is an inverse handle or if this is trying to fill a large bullish cup. Okay, and this bullish cup would take us all the way back to all-time highs. Okay, all the way back up to that 5 or that 6 13 range. And I'm going to make this pretty thick line so that everybody can kind of see very clearly. Okay, so we have the large inverse cups, we have the bullish cup going. Okay, um, so why does this kind of matter? Let me pull this open. We're in kind of a contentious area, and either we are going to finish out the top of the cup and reject down to build a handle and form a really, really large breakout, or we're going to reject and this is going to turn into, massive bearish liquidity, and this is the type of handle that, we go back to, the 380 range. And I know that seems unreasonable, but that's what this would turn into. Okay. Um, sorry, I'm just trying to look at this and piece together in my head for a moment. Yeah, so we have the bullish cup potentially form a bullish handle, and where would that handle form? It would form, essentially where our support is. Our 20 ma is right in this range where I have it circled right here. That would be a very good range to test that out, and whether if we're going to be bullish with the market, that's a perfect range to build enough liquidity to head back upward. And as I stated in a few other videos, it would then extend this major buying channel outward from this very, very bottom support, and it would invalidate this bearish structure. This inverse cup would no longer be a thing, and we would have the cup and handle, and this is how we get back up to the 600s and see potentially the 640s, 650s, by this end of the summer. But if we don't see that here, then it's going to be a big issue. But what I'm really trying to say is that we should see rejection, and we should see major rejection. Whether you're bullish or bearish here, we're kind of both in the same camp. We all want the same thing. We just want a different outcome. The bulls want this to bounce, obviously, and the bears just want it to completely break down. Um, but ultimately, we have started tapering significantly, and with the upper Bollinger really right there, yes, we've created some room on it, but it's still right at that upper channel. Our upward room is very, very closed off. As you can see, if we just turn off the drawings for a moment, if we look at the middle Bollinger Band, where is all the empty room? Well, it's underneath. That means that's where all the liquidity is. That's a ton of free contracts and everything else that dealers can really just take for free right now, because we're at such an elevated level. And again, I've gone over Bollingers on the daily time frame and how accurate they are. Whether you're at the lower Bollinger, heading back upward, or you're at the upper Bollinger heading downward. You do not maintain that range for too long. It doesn't happen. This is the longest it was maintained right here that have seen in recent history, and even then there were still some pretty major support tests. We so far have only been testing the 5 mile. That's great, but we now need to target this 20 mile. So yeah, that's kind of the thesis from here. Structurally, we don't have a whole ton of good structure right now. For example, this is the hourly chart. What do we have going on here? What I see is a large inverse cup. Okay, let's pull up the drawings for a moment. And as you can see, and I'm just going to turn that purple so everybody can see, it would turn into a really nice large inverse cup. And at the very bottom of that cup, of course, is where the 20 mile is. So that would be a perfect, liquidity test to, fake out bears and bulls to, whether bounce upward or, continue heading downward. And just to look at something else, let's see where the bottom Bollinger is on our chart right now. So it's not at the bottom of this channel yet, but if we do start pulling downward, the bottom Bollinger would start pulling down towards the bottom of that channel. So yeah, that's kind of the technical analysis for tonight. I know it's not very standard. I've had a really, really, really long day. Um, but I'm seeing buying tapering in here. Okay, I'm really starting to see buying tapering. I think that because we're not seeing good bull structure in here, I mean, it's not like we have a cup and handle going. We don't have an inverse head and shoulders. Um, there's really nothing telling us that there's buying going on. What I'm seeing is a buy up in the early hours and then sell off for the rest of the day. Buy up, or yeah, buys up early and then sells off. Buy up early, sell off. So are we seeing extreme controlled selling? Maybe, and that's kind of the bearish thesis right now is that, the SPY's overextended and we're seeing extremely controlled selling. And that's what I'm personally thinking we're seeing, but we won't know until we start seeing the 5 mile being used as a resistance. And, just to quickly show you what that would look like, pulling up the moving averages, you know, as the 5 mile is starting to pull above the market, it will start to push the market down. So as you can see in the correction, every time we pulled up to that 5 mile, it just instantly pulled back down. Okay, so it's being used as a resistance in this situation. Now, when we started to buy up in this situation, you can see that every time we hit the bottom of the 5 mile, it would bounce off. So it was a support in that situation. In the selling here, it became a resistance, started to push us back down again, and then it became a support, and it became a major support. It has been carrying us the entire way up so far. So I'm looking to see if this will become a resistance or if this will still just try to kind of whittle us up on the buying. Um, I'm not seeing strong buying structures right now, though. I'm very bearish right now. I do believe the cup kind of already finished the top, because we had this original cup right there, and I'm not drawing it because it's going to look terrible with the drawings right now. But we had that original cup right there, and we had the breakout of the handle right there. And this is the overextension of that handle. And even though it does lead into that larger cup, once we build liquidity out, this is still an overextension of this cup. So what does that mean? When you have an overextension of a cup, it leads into the breakout, and that breakout leads into consolidation, testing, support retesting, and then, if we're going to head up, we head up, and, if we're going to break down, we break down. So, um, going from here, we just need to continue to look at what the market is doing with the 5 mile. So if say tomorrow we see major buying above the 5 mile range, or basically at or above the 5 mile range into the upper bounds, then that can be a somewhat clear sign that uh, we're not going to be using that as resistance yet. Um, so yeah, we'll talk about it more tomorrow. Um, Tomorrow's video is going to be a lot more detailed because we do have the PMI data being released on Thursday. So have a good day, everybody. Trade safe, and I will talk to you in the next video. And I apologize for being so tired all the time. Have a good one.